John Jenkinson with you on this Monday. And by the way, if you're going to be attending the National Farm Machinery Show in Louisville, Kentucky, I hope that you'll be sure and stop me and say hello. I'm going to be there covering the event and look forward to seeing you. All right, let's go find out what the latest is. And the latest that everybody's kind of talking about in the trade today, of course, is that world supply and demand estimate that's going to be out. What about the average of the estimates going into that? Well, the ones that we have here from just kind of a recap of the average of guesses. Corn for the U.S. stockpiles, 1.86 billion bushels. For soybeans, 448 million, and for wheat, 953 million. When it comes to the world stockpiles, this is measured in metric tons, million of metric ton, by the way. Corn, 297.5 is the average guess. Soybeans, 97.2, and wheat, 287.2 million metric ton. So today on the futures market, we were down about 3 to 3.5, in a few cases 4 cents on the corn market. March down 3.5, the May down 4 at 384.5. The December new crop is down 2 3/4. It's at 391. March beans up 3 at 885. If you go all the way out to September soybeans, we are 2 higher at 915 1/4. Chicago wheat for March is off of the low. It's at 554 1/4 now. We are down 4.5 cents. Over on the July, we are 3 cents lower at 554. Kansas City wheat for March down 1/4 now at 472 1/4. So it is trying to make it a little bit of a comeback here. The July is down 1/4 at 485. Minneapolis wheat market is weaker today as well. It's down about anywhere from 1 3/4 to about 2.5 cents for Minneapolis wheat. And joining us at the edge of the trading floor in Chicago, Scott Gecas. He's with the Fox Group. And Scott, we talked a little bit about what could be in this world supply and demand estimate. We know that sometimes there's always a little bit of a surprise, but this one could be a little bit interesting because now we have the phase 1 trade agreement that's behind us, and we also have coronavirus. So how's the trade going to look at this report?
Well, that's exactly what we're looking at. You know, how big of an effect is this coronavirus really going to have on? Is that coronavirus going to be in this number, or is it going to be in the number after? So that's what the traders are definitely going to be focusing on. We already had the USDA lower the ending stocks number slightly, so we expect that number to stay roughly around the same. But with the coronavirus, what is that going to add? And with the phase 1, with the commitment from China, are they going to be able to fulfill this commitment? So right now, there's a lot of uncertainties going back and forth with that one way or the other. You're seeing expected or higher than normal volatility going into this report. But what's really going to be the outcome of this report is what are they going to say moving forward? You know, is this coronavirus going to have that big of an effect on the supply and demand stocks going forward, or is this going to be actually in this number? There's a lot of waffling going back and forth, or whether or not they're even going to mention this coronavirus. So in the past, USDA has downplayed a lot of different things in the past, so I don't really expect them to push one way or the other, but it's going to be interesting to see what these actual numbers really come out on Thursday.
Was the export inspections this morning a factor in any of today's markets?
Well, you're seeing the beans pop right off the bat. As soon as that number came out, they were up 7, came off a little bit. They just can't get away from that 80 line. So that's what we're going to be focusing on. To get away from that 80 line, we're going to have something that is going to move that, and it could be the report. You know, with the corn market, it's seen a lot of downside pressure, more than we've had usually. So right now, the corn market is the one that's leading all these a little bit lower. Wheat's going back and forth, so we have yet to see what these numbers are going to really be trade on.
Okay, Scott, speaking of numbers, we'll get to the livestock next. We'll be back in just a moment here on the Market Day Report. Let's get our latest here on what's going on over here in this livestock market. And the live cattle market, a little bit on the weak side here to start the brand new week. 90 cents lower for February at 120.42. And we traded cash cattle basically just slightly above this, around that 121 level, but it was about $1 lower in the south, about $2 lower in the north. April down 102 at 118.78, and the June down 75 at 110.53. In the feeder cattle market, March down 2 at 135.18, April down 57, and the May down 65. Then you go out to those far out deferreds. We are over $1 lower. And the hog market, after a kind of a big move on Friday, today we're down 60 on the February, 56.50. April down 60, but the May up 8. Scott, what do you think of this livestock market here today so far? Pressure over here in the cattle. Hogs, though, trying to make a little bit of a comeback here, particularly on those deferred contracts.
Yeah, with the cattle market, it's nice to see that cash cattle trade staying a little bit steady, a little bit strong, even though it's awful slightly. But the big thing that was sparking my interest on Friday is we've seen a big sell in open interest. So the funds are still net long, but they're reducing their contracts quite a bit. So you're starting to see that liquidation. That's why you're seeing a little bit of pressure. Now, when you flip over to the hog market, that's a completely different story because the funds are long. They're still adding contracts. The African swine fever is still spreading. It hit Greece. It hit Germany. So, but with the coronavirus being widespread and no one knows how accurate that information about that coronavirus is coming out, some reports are saying that it's just the tip of the iceberg. So if this starts increasing and spreading and becomes a bigger epidemic than it already is, I mean, I really don't see China starting to import any massive amounts of pork anytime soon. So going into the second quarter, we're already having supply concerns. So I think that is going to continue on. If we just look at the chart on a technical level, we expect to test the contract lows around 52.25 or so until something comes out with a reason to get long.
Well, that 52 is quite a little ways still under where we're trading at right now, Scott. Thank you very much. We'll talk to you again very soon. I do want to